Hey, greetings. Dr. Jeffrey Scott here. This is my Market MRI Pro update for May 28th, 2025. And if you turned off your quote machines, your futures, and went away after NVIDIA's earnings, boy, are you going to be shocked as to what's going on. The big news turns out not to be NVIDIA earnings. Yeah, they were fine. Um, I think some of their charge-offs related to China aren't as bad as what people were afraid of, and the processor that they were sending to China were so horrible and out of date that weren't going to last long anyways from a marketing perspective. But boy, oh boy, did the U.S. courts make a difference. So who knows where this will end? But the big news is the U.S. courts blocked the Trump tariffs, at least the reciprocal tariffs, and futures have jumped higher. Again, Jeffrey Scott's my name. MarketMRIPro@gmail.com is my main email, hgsidoc@gmail.com. Google Groups is Top Down Trader. Thanks for all the kind words for the Memorial Day tribute I did to Ian Woodward and his tools. Um, if you like that stuff, you should come to or sign up for the meeting that we're doing this weekend in Orange County. I'll mention that in a second because I'll make that stuff come to life. This is for educational purposes only. Any recommendation should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You and you are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention in this report, and trading stocks and options should be considered risky, and you should always consult with your financial advisor before making trades. I have tools in multiple platforms, but on these videos I've been using predominantly Market MRI Pro, which is a tool that, believe it or not, one of my users, Praveen, built for me to make my life easy, and we decided to take it to the marketplace um, as well. Orange County meeting will be a week from Friday, Saturday, Sunday, June 6th through 8th. There's online and live. I'm not sure if there's any live spots available. It's at the Residence Inn and Suites in Tustin, Orange County, California, where the weather is always beautiful. $400, 5 speakers, 3 days of great education. There's always surprises that happen. And I'm so committed to this meeting, even though, as I've mentioned before, I do it. I don't get paid. I don't get my travel, and it's paying homage to a good friend of mine that we lost, George Lee, who used to run this meeting for many years. I will give anybody that signs up for the meeting and purchases the Market MRI Pro Live during the event, I will give you up to $500 off. If you come to the meeting live or online, that gets you 400. And if you sign up for Top Down Trader, that gets you another 100. So it's not a cheap tool. Um, it comes with data and all kinds of updates, but that's a big discount. For more information, please contact Greg Mills at gam72054 at AOL.com. Down below, you can see the speakers I've got signed up. These are not lightweight speakers. I may be the lightest weight, and I'm 6'5", 240 pounds, and I'm not little. But John Person, Dan Fitzpatrick, Matt Caruso, and then Chris White, the proprietor of EdgeRater, are outstanding speakers. And how outstanding are they? I own John Person's indicators and packages. I paid for his education. I've subscribed to Dan Fitzpatrick's various services for probably 15 years. Why would I do that? Because after I do this video, I'm going to go listen to a strategy review. And he looks at the markets very similar to how I look at it. And I just want to make sure that he validates my thoughts or makes me go back and look again. And then you have Chris, who will talk about EdgeRater and some of the new tools he's built, and then Matt Caruso, who I also and I own Chris's tools, but I also subscribe to Matt Caruso's. He's more on the active swing trading, more active than I am, but I learn from him every time I listen to a video or attend one of his sessions. So I guarantee you'll be impressed with the speakers. My top-down trader group is free. You get that extra $100 discount towards Market MRI Pro whenever you buy it, but the $400 is a rebate of your $400 tuition for the meeting. You only get during the meeting and probably for the next 5 days after through the following Friday. Sign into Google Groups, put your user ID, your Google ID, look for Top Down Trader. Let me know how you want to be notified of my videos. News and earnings, a couple things to point out. NVIDIA up after hours. They were up a little bit, 4 or 5 bucks, and God knows where they're going to end up because I think everything, at least at the open, is going to get goosed by this tariff news. They're up 5% at the end of the after hour section. I guess it trades 24 hours, so out of curiosity, let me look at my Thinkorswim, and it says it's up 141.60 is about where it's trading. That's up a little bit less than $7 from the close. It's my biggest position, not because I was so smart and bought a lot of it, because it went up so much, and then it split, and it's got a lot of shares, as I'm sure many of you do as well. Other earnings, Salesforce was up a bit. C3AI was up significantly. There were mixed results. Just to review the other big ones, Vive was up 15%. The C3AI was up 10%. HPQ down 13%, S down 12.2%, and PSTG were down 3.7%. So mixed, but I think you're going to see craziness on Thursday. News-wise, on Thursday we'll get jobless claims and GDP and then a bunch of Fed heads. If you're looking for a rate cut and the tariffs go away, that was the big thing that was keeping the Feds from acting. So now, just because a court ruled against tariffs doesn't mean the Supreme Court will. And it's not that tariffs are bad from what the court said, but the powers or the rules that he evoked to do the tariffs were held not applicable. So should be an interesting, and then don't forget on Friday this could all disappear because we got the PCE, and we'll see what that tells us about rates. So big news over the next 2 days, but boy, probably nothing bigger than this tariff issue. And let's see what else. Don't forget Costco earnings after hours, Best Buy before, Foot Locker before, but I think Foot Locker's being bought so by Dick's, so I don't think anybody cares. Dick's or Deckers, I can't remember which one's buying Foot Locker. And judgment call to hold stocks over earnings dates. Bad judgment to not know when your stock's earnings date is scheduled. So on to the charts. Now, let's talk about what we saw in the market today. And let's just go, this is Market MRI Pro. It's a bunch of pages of, call them layouts. So the first thing is today was a mixed day. You could see the VIX was up 1.15%. The dollar was up 0.33. And Bitcoin was down 2.7, and then the major market ETFs were down, ranging from 0.44 for the Qs to 1.05 down for the Russell. So negative day, but not a huge day. Kind of a, as I said in my video last night that I only posted on Top Down Trader, I mentioned that it wouldn't surprise me to see us just consolidate a little bit, which is what we essentially did. The indices did close at the lower part of the session. They seemed to sell off into the close, and maybe some of that was preparing for what if NVIDIA missed, or Salesforce, which was the other big name. New high, new lows, still new highs minus new lows at 52 weeks or 12 months remained positive on both the NYSE and the NASDAQ. If we look at the sectors, and one day is going to make a big difference, at least at the open. Real estate was flat, followed by communications and then technology. But everything was down, and even the defensive things were down. Staples, discretionary were down. Broad-based weakness, but we'll look at the charts. It really was a kind of a pause day. And if we look at what's working from a theme perspective, clean tech, cannabis, gold, silver, Southeast Asia, aerospace, defense, e-commerce, millennials, even let's see, that's, I guess we're now moved to the negative side. Retail down just a bit, really seemed to go up because of Abercrombie and Fitch earnings. Now, if you see a blue line here, that would mean that today some of the sectors in the S&P 1500 were positive. They were none. Yesterday, almost all of them were. 11% of the industry groups were positive versus almost all of them, and only 16% of the stocks in the S&P 1500 advanced. Very different day than the prior day. Sector-wise, no sectors were up in the NASDAQ, 19% of the industry groups, 35% of the stocks were up. And if we look at the NYSE, 1 out of 11 sectors were up, 14% of industries were up, 25% of stocks. So it was a weak day. Those that watched the video last night, those that looked at the market on, get my days straight, Tuesday was a really strong day. So again, not a big surprise. But let's look at what's happening after hours. And this is TradeStation. I have tools in it, but I certainly don't own the program. Here is E-minis. And when you see a trend line in TradeStation, I'm using Sager-Nandy's Q memory. Here's the old high line, which we retested a couple of times before failing. This is probably a minor trend line in here comparatively, which we are breaking through after hours on the futures. And, do I think we're going to go and test old highs? I do. Unless we get a huge surprise on jobless, PCE, or the GDP, why wouldn't we go up and test old highs? If we look at the NASDAQ, you could see it's getting up there. Let's just open this guy up. Again, trend line of old highs, it's going to have to get up to about that level to set new highs. Certainly as possible. Is it probable? I don't have a crystal ball, but I bet at least test this trend line. If we look at the YMs, the Dow futures, pull back to support, not quite broken out here yet. Old highs are, they're way up here, probably a bridge too far, but let's see how they go. Right now they're running up a wedge, running up the trend line. So you could see across the top, 1.6% E-minis after hours, 1.9 the NASDAQ, 1.3 the Russell, the Dow, the Russell is 2.5%. Wow. And Bitcoin, not as much, but still up 1.17%. So markets are powering forward. Now let's go back to what we saw in the markets on Wednesday. Let's look at the timing brief. This is my timing model. And we look really at these green bars or red bars here underneath the charts. The weeklies are bouncing back and forth, buy, sell, buy, sell, buy, sell, buy, sell. It all depends on price and the bongo. The weekly spiders and Qs are solidly green, while the weekly Russell and the diamonds have been the flip-floppers. After tomorrow, my guess is they'll flip back to buy. Remember, the changing last bar on weeklies doesn't matter until the end of the week. It's not closed yet. On the daily side, very different story as we've had a beautiful run in the markets. Takes a second to switch to daily. You can see we've been, let me change, let's go to year to date. Lots of buys on all four of these. So short term, daily charts, we've been in a strong uptrend. Weekly charts, we flipped to an uptrend a couple of weeks ago at risk of losing it on the diamonds and the Russell, but probably not based upon the news I mentioned. If I look at the U.S. ETFs of the markets, and again, who cares? You saw what they're doing after hours. I care. So let's look. We see that the spiders had a bit, I'm not sure it was an inside bar, but it was down 0.5% after a move of 2% the prior day, finished midway down the prior, the candle, the open area of the candle, not the wicks, the body of the candle. I don't think that breaks anything, and consolidation day. You look at the Qs, similar type of a candle, down 0.44, and the prior day they were up to 0.35. The diamonds are different. Notice both the spiders and the Qs are above the 200. The diamonds today failed at the 200s and we're down 0.5%. The good news is we know unless something big changes overnight, will these power through. The Russell, kind of another take a breath day, down a little bit over 1%. But you see the prior bar was massive. It was up 2.5%. Markets didn't do much, and the VIX was up a little bit, 1.42. And you could see the dollar gapped up a little bit, but 0.33%. And if I'm worried about the dollar, then I really have to think on a bigger scale. And on a bigger scale, dollar's way off its highs. And what we heard on some of the earnings calls tonight is that weak dollar turns into a tailwind, not a headwind on their earnings. Commodities, if the dollar's going up, you might expect, let's just see if I can change this to, I guess it's not doing that in this chart. All right. There's something here you may not have seen before, but you could see gold kind of did nothing today, down 0.23%. If you look at silver, it was down a bit as well. Oil failed again at the 50. It's really struggling to get above the 50. It was up, however, 0.91. Natural gas broke down below the 200, minus 5%. And then after falling 3 days in a row, the 10-year and the 30-year both rebound. The 10-year was up a bit. I don't know why. There it is. Up 0.97, and the 30-year was up 0.81. And just checking here, silver, it's there, minus 0.83. So, weekday in the market, yields were up a bit. Metals were down. If one thing that you may notice if you own the product because you don't have it yet is say hello to my friends called intraday charts with hourly and minute charts, and you can select how many of each of those you want: 1 minute, 5 minute, 1 hour, 4 hours, etc. That will be in a coming update. On the buckets, weekday, so you're going to expect the buckets to shift to the left, and you clearly did with more stocks popping up here, but no signals. There's nothing here that says we're going to bounce or we're going to fall. No signals. If we go and we look at market breadth, left is the NYSE, right is the NASDAQ. You could see the breadth of stocks above the 20 in green, 50 in white, 200 in red. On both of those eased off a bit. If we look here, we can see on both, on the left and NYSE, the right, the NASDAQ new high, new lows were positive. But the AD lines were negative and the up-down volume was negative. And we had no new signals underneath. One of the things that I've been playing with are some new market breadth charts. And I did want to show, because I think this is a much closer to what I'm used to, is we've got the 13-week new high at the bottom of each of these windows. On the spiders, it's 0.97, which means it's as extended as much. New high versus new lows. It's the 97th percentile. Reversal time. 100 percentile on the Qs. 100 percentile on the diamonds. A little weaker on the Russell, 79th percentile. NYSE, 81 percentile. And the S&P 1500, 92nd percentile. All this tells me is I would be concerned, had I not seen the futures in the story, that we are going to soon get to a place where the market is getting extended by this, the 13-week new high, new low tool that we like to use. Looking at the ratio charts, get a sense of what's working. Now remember, I explained this again last night. How could we see some things going up on a bad market day? Like look at technology, had a nice up move. Discretionary is holding up pretty well. While staples, industrials gave up a little bit, utilities were weak. Real estate was actually high, surprisingly, with rates going up. You could see materials came down strong because these are S&P 500 sector ratio charts. Forget the Bitcoin, it's also a ratio chart, but it's obviously not an S&P 500 sector. And since it's a ratio chart, they're really looking at the performance versus the S&P 500. So it's relative performance. S&P 500 was down, and if I was down less, like technology, I'll look at a ratio chart like I was up. So now we go into the layout. So, we cheated, kind of, sort of, by looking at the futures, and we know the market's going to rip at the open. But we don't know if it's going to rip and stay higher or whether it's going to be one of those days that might be referred to as a gap and crap. A couple other things I wanted to show out the users so they can get excited. You can now, what you will be able to rename when this version comes out. You click on those little boxes up here. You get the names of the different things, and you could just highlight on it. Let's change that to buy watch or JAS buys. So I can now change, I wish I could spell, but that's okay. We can change the names of the groups, and that might be helpful. It's helpful to me because I do a lot of importing and watching various things over the week. Now, if I go into the top down, let's see if anything was looking good, and let's just rank the industry groups. All the sectors were negative. Now, these groups are a little bit different than the S&P 500 because I've got a universe of 3,600 stocks, and they're sort of packed into the various sectors or industry groups. As we look at this, when you see nothing, I think we're going to find like new stocks or stocks that are weird. So CEP, it's a new ticker, so I don't know what that is. Acadia Pharmaceuticals. And then this one is another ticket for Acadia Pharmaceuticals. So clearly our data supporter or supplier had some issues. And it's also not March of 2025. What these are probably could be our new issues. That one could be a new issue with a break in time. And CEP at, don't know, February, March, April, daily charts. Again, when I see that blank, I usually ignore that group. So let's look at beverages, packaged foods, industrials, grocery stores, investment banking, utilities, silver, gold, food distribution. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. One thing is, don't they feel defensive? Beverages, packaged foods, grocery stores, utilities, gold and silver, and food distribution. That's not a cha-cha-cha growth-led rally. Well, there wasn't a rally. And then I might come down here and look at 2-day momentum, see what comes to the top, and just look, GEV. How many people are riding this? Praveen and I are, and you had multiple bites. The first big opportunity of this stock, this is the one tool I'm not good at in my, not, well, I won't say the one tool. I'm sure there's more than one tool that I'm not good at in my own program. Let me try this again. Box. All right, I got to remember how to use the box tool. But you had a nice sideways move and a breakout here with a big run, and then we had some issues in the market. The market dropped and it sold off hard. I think this had to do with data centers having an issue and they provide power. This is also, yeah, something's wrong, Praveen. It says pharmaceuticals here and it's not. So I think that the beta version, which I'm using, has an issue. But boy, what a run. This is a electric producer. It sells the tools to produce electricity. What a major run. Sprouts Farmers Market, nice move up, pullback, and a breakout off of the 17. And I don't see my 50 either. So let me flip back. I want just to show those a couple of those new features. Let me flip back to the version that is actually production. All right. The benefit of production is it's already gone through testing, and I was just testing out the other version. And I was so excited by the new features, I showed them to you. But you could see the white is the 50, the green's the 17, the blue's the 200. But we had this beautiful move into the 50 and a kickoff of the 50 with a bunch of blue dots coming in out of a squeeze. Then pull back to the 200, and then here's your pull back to the 50, and then a breakout here with relative strength and OBV strong. This thing has got to be extended, but it's still an IPO. I don't have enough data to give me the high jump. Spotify, we've looked at this several times. It's kind of at all-time high area. Strong. Sprouts Farmers Market. It's had a couple of tops here, so that would be concerning. Can it break above that? Joy Communication Services, I think it's a Chinese stock, big pullback, ran up to the 50, consolidated, and broke out here with some big days. Let's see if they had some earnings. And we can see 528, they had 15% growth. Little bit of a revenue surprise on revenue. Revenues here, actually no surprise. Sorry about that. Pays a very teeny weeny dividend, Joy Global. SMR will be in the same world as GEV. I think they're involved in electrical generation, but through the use of small nuclear reactors. PFGC, these are all nice charts, but is one of them actionable? Maybe Meta. I mean, Meta, like many of the FANG stocks, was flagging and kind of sort of has broken out of the flag. And we know it's going up most likely tomorrow based upon where those futures are. When's Meta's next earnings? July 30th. CEG is another electric utility. I mean, there's a story there, and it's related to data centers. Reddit doesn't look like much, but this is a $100 chart. Recent IPO. So that's to me as top down. Here I didn't even look at the sectors. I went to the top 10 industry groups. Sexier way is to go bottoms up. So let's just go in here and let us knock out stocks less than 500,000 shares and $5. Let's put pullbacks and uptrends. So I'm not getting extended things. Let's go by number up. Let's look at top. Let's just go through these. Ocular Therapeutics. Not yet for my taste. I don't usually buy below the 200, but if I was to buy, it might be something like this. Clearly had earnings, and you look at the earnings and they suck, but they must not have been as bad as they were projected. And you can look here for news and see if there's anything going on. Maybe we need to read it and figure out what's going on. And you could just click on the link and you got the transcript right there for you built in. You don't have to do anything extra, any additional charges. Joby is, I believe that's one of the electrical plane companies, and I believe this one got a big investment after hours. Let's see if it says anything. Electric air taxi maker closes $250 million strategic investment from Toyota. Now, whether that propels it higher or not, pretty impressive session there. We talked about Hologics yesterday, and I don't think I knew why, or hologram. And this one had a nice bounce here today. Actually, it was Hologics, not hologram. And we could go down this list. HEI, uptrend, pullback, breakout, extended too far. Box, similar thing, pull back, big breakout, probably extended too far. But here's one that I like, and that's Unity Software. Big move. Let's see when earnings. Earnings are already out. Let's see if there was news on it today to drive it. Double-digit upside ahead. Well, that will get people excited. So that was another approach. Here's another thing I like to do. Let's take that full list and let's just close by looking at my favorite signal. So $5 and 500,000 minimum, 2 Momo days in a row. Hit OK, and let's see if we got anything. There's Unity. I already said I like this one. So why? Not extended. Daily and weekly bongos are buy. A nice breakout on good volume. volume breakout momentum from a squeeze, relative strength at OBV shooting up. GLNG, LNG company. Um, it looks interesting. Let me see if earnings came out. Earnings came out the 27th. They don't even look good, but look, the market's rallied a couple days in a row. You know, it can look bad, but the fact there was a surprise, or excuse me, that they're making money, it's what the market predicted. And if this outperformed what they thought it was going to do, even though the numbers were negative, it can go higher. BNED, no interest, and then Mass, another cheap stock. I don't know anything about this company. I like the uptrend, pullback, and breakout, but it's probably a little bit too much, too loosey-goosey. So I think the two look interesting here, Unity and Golar LNG. So here's one tool, soup to nuts, top down at its greatest. Hope you have a great day and hope to see some of you come to my meeting and join the Top Down Trader Group. Thank you. And enjoy the ride tomorrow.